Ladies and gentlemen, good day and welcome to Satia Industries Limited Q3FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Diwakar Pinde from EY IR. Thank you, and over to you, sir.
Good afternoon, everyone. On behalf of Satia Industries Limited, my pleasure to welcome all of you to this company's Q3FY23 earnings conference call. You would have already received the Q3FY23 results and investor presentation, which has already been uploaded on the exchanges and on the company's website. To discuss the company's business performance in the quarter gone by, we have with us today Mr. R.K. Bhandari, who is the Joint Managing Director, and Mr. Satia, the Chief Financial Officer of the company. Before we proceed with the call, disclaimer, please do note that anything said on this call with any interaction and inaccuracies which reflect the outlook towards the future, which can be construed as a forward-looking statement, must be viewed in connection with the risks the company faces, and these risks may not be updated from time to time. More details are provided at the end of the investor presentation and other filings that can be found on the company's website at www.satiagroup.com. Should you have any queries or any further information in this call, you can reach out to us at the mailing address mentioned in the company collections. So that said, I'd now like to hand over the call to Mr. Satia. Thank you, and over to you, Richard.
Thank you, Diwakarji. Very good afternoon. On behalf of Satia Industries, I welcome you all to our quarter 3 and 9 months financial year 23 earnings call. And I hope New Year 2023 is going great for all of you. As you are aware, our company is an agro and wood-based paper pulp producing company and is fully backward integrated. Our locational advantage in the wheat belt of India continues to ensure year-round availability of raw material. We are happy to announce a strong set of quarterly numbers with second consecutive quarter of improvement in EBITDA margins, which is in line with our guidance stated earlier. Healthy pricing scenario and our cost-cutting measures like the caustic soda recovery, rice clean, and green energy production capabilities are the key reasons for the steady increase in the margins. Coming to our numbers, we have reported highest ever sales and EBITDA during quarter 3 financial year 23. Revenue from operations has increased by 125% at 4,868 million. For 9 months financial year 23, revenue from operations grew by 129% to 13,631 million. Our continuous efforts and focus on our profitability have shown fruitful results with improvement in our EBITDA margins for the second consecutive quarter. For quarter 3 financial year 23, we reported EBITDA of 1,102 million and margins of 23%, which are now near to all-time high quarterly margins of 27%. Strong volumes, better pricing, high operational efficiencies are the key factors for the improvement. For 9 months financial year 23, our EBITDA was 2,725 million, a growth of 118%. EBITDA margins were 20%. We expect these margins to sustain if prices remain at current levels, which we believe so. PAT for the quarter was 648 million, a growth of 124%. For 9 months financial year 23, PAT grew by 105% to 1,459 million. Our current order book is of over 30,000 tons, and these would be executed in quarter 4 and thereafter. Such orders provide solid revenue visibility to us and helps us to effectively steer through the volatility in the prices, if any. We continue to improve capacity utilization from our PM4, which started operations from Feb 22 and almost a year back. We expect it to improve further in the next year, along with our backward integrated expansion of wood pulping, which would come on board by the end of this financial year 23. We are keenly looking forward to our plans of entering cutlery business in the next financial year with the installation and commissioning of 8 machines for making different products in the business. The paper industry continues to be in limelight due to broad growth factors like national education policy, which we have been hearing since more than a year. We believe these have long legs of growth, and we haven't even scratched the surface. The new education policy 23 is expected to bring significant changes to the way education is imparted in India. It is emphasizing the importance of teaching a wider range of subjects, including arts, sports, vocational skills, in addition to traditional academic subjects, and aims to provide education to all. This is opening more and new avenues for growth for our segment of writing and printing paper. We are happy to announce that board has announced 20% interim dividend. With this, I thank you once again for joining in and listening to me patiently. We can now request the moderator to move towards the question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Rahul Tanwar from AB Advisors. Please go ahead.
Yeah, hi. Good afternoon, sir, and thank you so much for taking my question. My first question would be if you could give me sales volume for this quarter, last quarter, and Q3FY22, please, if that is possible.
Will you please repeat the question?
Yeah. So, I need the sales volume for this quarter, last quarter, and for Q3FY22, if possible.
Yeah. This quarter, we sold almost 53,000 ton of paper, and last quarter we sold 51,500 ton of paper. And last year, overall sale was 1,43,700 ton. So this year, total tonnage should be anywhere around 2,10,000 ton.
Okay, so I get it. And what would be our outlook for the paper prices for next quarter and this quarter?
Yeah, paper prices, since as Mr. Rachit told, we have an order book of almost 30,000 ton. So maybe in this last quarter, we may be having a price rise of further 5 to 6% over the last quarter, and then maybe almost similar prices in the next quarter. So for next 2 quarters, we look very good. Yeah.
Okay, understand. I have one more question if I can squeeze in. So are you thinking of any cost reduction like power, fuel, chemicals, and other expenses?
Yeah, that we even told. Yeah, we told in our last call also. Now we have 2 boilers. One we are running on risers. The other is being run on the rice straw. Rice price is anywhere between 8,000 to 9,000 rupees a ton, which we use almost 500 ton per day. So we are converting that boiler. We are rather putting up a new boiler, which will be again running on rice straw only. The price of rice fuel is almost 2,000 rupees a ton, which is almost one-fourth of the rice's price as on date. So that will be one major cost cutting that will come in the next 1 year, in the next financial year. Yes.
Okay. Understood. Okay, sir. Thank you so much, sir. I'll join now.
Thank you. Next question is from line of Yogansh Jeswani from Metal Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity. Just a couple of questions. So, you have talked about this in past, but if you could just share more details on the pulping capacity in terms of how much cost saving are we expecting on EBITDA per ton basis? And will this start accruing from Q1 itself once the plant gets commissioned in Q4, or will the ramp up take time and it will be increased?
Yeah. Part of the wood pulping capacity will start in the last month of this quarter, and rest, as you rightly said, will ramp up in the first quarter. So today, if we look at our pulp percentage, we are almost using 50% of straw pulp and 30% of wood pulp, and we use almost 10 to 15% of waste paper pulp also. So that pulp cost is almost 5,000 to 6,000 rupees higher than the wood pulping cost. Number one, that we will be replacing 100%, number one. And number two, we are using wood pulp because of low strength waste paper pulp, which is to the tune of 8 to 10%. So this will be reduced to almost 5%. So cost of this pulp is also almost more than 40 to 50% higher than the in-house wood pulp. Looking to the international prices of the imported softwood hardwood pulp. So definitely it is going to affect the overall costing and EBITDA margin in the times to come. Yes.
Okay. And could you quantify it simplistically in terms of, because for me to make that calculation, I still have to, think about what kind of yield comes out from pulp. If you could just give a simplified number, even a broad-based number. I do understand pulp numbers will be market dependent.
Yes. If we look at our raw material, cost of material consumed, it comes anywhere around 49%. So once we are fully operational with this wood pulping cost, we may come near 42 to 43%.
Okay. That's helpful. So second question is on the capacity side. So after the PM4 coming up, our capacity is almost 205,000 tons, right? And this year we are expecting to close the year with 2.10. So in a way we are more than 100% utilized. So going forward, what is our expansion plans? Are we thinking of any other capacity expansion other than the 8 cutlery machines, which I'm again guessing is a very, very small amount given our total size and scale? Cutlery will be a very small portion. So any other growth plans?
We started PM4 in February, and if I look at the average speed of the machine that we achieved in this year, the average speed of the machine starting from February till date is 900 meters per minute. While this machine is designed to run at 1000 meters to maybe even 1100 meters per minute. So number one, 10% increase we are expecting from PM4 more by taking this machine to over 1000 meters per minute, which we are already running as on date. Average was 900, but we are running at 1025 meters as on date. So once that average comes for the whole year, so the production is like if the grammage of the paper remains the same, average grammage remains the same, so we should be ending up almost 9 to 10% higher in production on that machine itself, number one. And number two, management is working on a plan to increase and the speed of PM3 also, modernizing PM3 and increasing its speed from present 60 meter to 725 meter per minute. This project will be taken up in the next 2 financial years. So it will start, maybe take off in the mid of next financial year and end up being finalized in the next financial year. So these are the two immediate plans. PM4 will be effective in the next year itself, and PM3 upgradation will start giving result in the next financial year after the next financial year. Yes.
Understood. Last call we mentioned that we did touch 1100 meters per minute in PM4. Or was it again the guidance? I might be missing.
1100 meter is the ultimate design that they have given. It can go safely up to 1100 meter. But we haven't so far touched 1100 meter. We have now gone to our peak of 1025 meter per minute only. The full French team was here for 7-10 days to do whatever needs to be done on this machine after a running of more than 1 year. So did that, and we achieved again 1025 meters. So that was the peak we have achieved so far. Yes.
Okay. And one last question, sir, then I'll get back in the queue. Can you share what are the current realizations in the market for writing printing paper?
Current realization is anywhere near 88,000 to 90,000 rupee a ton. Since we are now executing the highest realization orders that we got in the last 1 quarter, in the last 3-4 months. So our realization could be 5 to 6-7% higher than this in the last quarter. Otherwise, the prices are higher. Yeah.
Okay. And do you see these realizations to stay firm at these levels, or are we now seeing some sign of slowdown here?
Yeah, presently, for next 3 to 4 months, maybe up to June, the things seem very, very stable. But after June, we have to see how does this new education policy takes up and what kind of response we get from the market. Maybe till then we can keep our fingers crossed. Yeah.
Got it, sir. Thank you so much, sir. I'll get back in the queue. Thank you for calling us.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Manjul Shah from AMA Services Private Limited. Please go ahead.
Hello.
Hello.
Yeah, thank you for the opportunity, and sir, congratulations for a great set of results.
Thank you.
Sir, a few quick questions. Sir, mentioning that we will be doing 210,000 tons by FY23. So, what would be a sustainable growth rate for FY24 and FY25? That was my first question. Second, as you mentioned that in CapEx we are planning to, so basically for PM4 we are planning to increase the speed of the machine from 900 meters to 1000 and 1100 meters per minute, and in PM3 we will plan of upgradation in FY24. So the result will be received in FY25. So apart from these two things, are we planning any more capex in a new machine right now, or any capex in the cutlery segment? So that was my second question. And the third question was regarding what was the capacity utilization till 9 months, and what would be the normal depreciation run rate quarter-wise? So yeah, so these are my 4 questions, sir. Thank you.
Yeah, depreciation, I think I'll request Rachit to clear afterwards. So, as far as the growth level that we target, so I think 7 to 8% increase in the numbers, volume of production is likely to be sustained under all circumstances because of increase in speed of PM4, number 1, in the next financial year, and next to next financial year with the coming up of modernization of PM3. So the CapEx in cutlery, as we had told in the last call also, won't be more than 10 to 15 crore because infrastructure is already in place. We have already placed order for 6 machines. 2 machines have been dispatched today already. 2 are already installed. So 4 machines should be running in a month or so, and next 4 machines should be here in the first quarter of the next year. And the numbers from cutlery segment should start coming from next financial year if everything goes well. So CapEx, presently, management doesn't have any plan to go in for any new machine, but definitely one boiler is coming, as we explained earlier, for which will be burning right as fuel to economize on the fuel saving. And second CapEx that we are doing, which we have almost initiated already, because with increase in wood pulping, we will be having higher level of black liquor with us. So for that, soda recovery boiler with higher capacity, presently we are running 2 soda recovery boilers. So we intend to, in the long run, keep these 2 as standby, and a new recovery boiler of 1,000 ton solid per day is being installed, which should be operational maybe within 1.5 years. So that is a laid out plan already. Yeah. So depreciation, I think Rashid ji will be able to explain better.
Yes, sir. Quarterly depreciation is around 30 to 32 crores. This year, like we are expecting 125 to 130 crores depreciation this year. So in next financial year, maybe like it is somewhere around 120, 125 crores.
Okay. So, sir, if I can squeeze in just 2 more questions. Just regarding EBITDA, so when we are going, we are like strengthening our backward integration. So how will our EBITDA margin stand for the coming 2 years, so FY24 and FY25? So can we expect an EBITDA margin of 20% to be sustained?
Yeah, 20% is definitely will be sustained by all means, but if our cost of material consumed, which is now at almost 48 to 49% because of higher prices of the wheat straw. So even wheat straw prices are now coming down slightly. So if we are able to control our cost of raw material consumed to the level of 42 to 43%, so we should be doing EBITDA even at the last quarter level also in the longer run on sustained basis, which could be anywhere around 20 to 23%. Yes.
Okay. So sir, can we expect, currently paper price, writing and printing paper prices are close to 88,000 to 90,000 a ton. So if the raw material prices go down, is there any chance where we can find the paper prices also correcting? Maybe you said after June, like till June you said the prices will remain stable, will remain firm, but probably after June.
Yeah, because the total family of the paper industry, if you talk of the brown paper or you talk of duplex, you talk of folding box board, you talk of newsprint, you talk of tissue. So since the total family members in the paper industry, they have come down, and pulp prices internationally, they have also come down substantially, almost from 10,070 dollar per ton to today softwood pulp is at 830 per ton, so which is almost 250 and 25% down. So that way, definitely prices can correct.
Okay. And after correction of prices, we'll be able to sustain the 20% EBITDA margins.
Yeah, minimum 20. I think we can. We are almost quite definite about that. 20% we shall be able to maintain, which we have been maintaining almost for the last 3-4 years also.
Okay. And sir, in our presentation, you have mentioned you have given some information relating to the packaging industry. So, are we planning to also get into a packaging, like packaging product as well?
No, not yet. Not yet.
Okay. So we'll be into writing and printing and the cutlery segment. This will be the two segments.
Yeah. That will be the main focus. So if cutlery goes good, maybe we may expand in that segment.
Okay. Thank you, sir. Thank you for your time. I'll get back into the queue. Thank you, sir.
Welcome.
Thank you. Participants, you may press star and one to ask the question. Next question is from the line of Prashant Rishi from Cascade Capital. Please go ahead.
Sir, just following on the last question that was mentioned, you said the pulp prices have corrected and paper prices have corrected. So pulp prices have corrected more than paper prices would have corrected recently, right?
Yeah.
Okay, sir. So in going forward, just a theoretical question, are we better off, say, buying pulp from open market and manufacturing paper versus, what we are planning to do, putting up a wood pulping capacity and then producing paper? In a scenario where pulp prices are crashing and paper prices are, say, going down slowly, are we better off buying it from the market, pulp from the market?
Because it is a backward integrated unit. So when we make pulp, so if my pulp cost, let's say we presume a figure of for wood pulp, let's say it is between 55,000 to 60 rupee a kg, which comes to almost $725 or $720. So still, when I make pulp and get black liquor, which I treat in soda recovery, I get steam also. So from that steam, I make power. So that benefit, if we reduce from this costing, so even at a price below 700, it is more viable to make paper in-house, number one. Number two, when we make wheat staples, that price is much lower than this. It is almost 25 to 30% lower than the wood pulp price. So that price we can never get from the bought out pulp. Yeah.
Okay. Yeah. All right, sir. Sir, I have another accounting question. Maybe Mr. Rachit can help me. When I look at the liability section on the balance sheet, there is something called security deposits. So around 100 crores of security deposits are outstanding year after year. I just wanted to get a sense where have we collected these deposits from, and are we paying interest on these security deposits?
No, these are interest-free deposits. Major of the amount are interest-free deposits. We are taking it from our dealers, from our vendors, from our contractors. These are the deposits we are taking from them only.
Okay. All right. So no interest on this?
No.
Oh, all right. That's it from my side. Thank you, sir, and all the best.
Thank you. Next question is from the line of Rohit Sukheja from VAPS. Please go ahead.
Good afternoon, sir. As you mentioned in the last quarter that that you were increasing wood pulping capacity to 350 tons. So, when will we see that capacity addition, and also, how much percentage of our profit would increase by this capacity addition?
Rachitji, I think you can go ahead. Yeah.
Could you please repeat the question?
Sir, you mentioned in the last quarter that you were increasing wood pulping capacity to 350 tons. So my question was, when will we see that capacity addition, and also how much percentage of our profit will increase by this capacity addition?
Yeah, it will definitely increase our, as I explained earlier, because we will be replacing it with the waste paper and imported wood pulp, which is costing almost 5,000 to 10,000 rupees higher. So that it will definitely add to our margins by minimum 3 to 4%. Yes.
Oh, okay, sir. Okay. Thank you so much.
Yeah.
Thank you. Next question is from the line of Kunal Jain from District Asset. Please go ahead.
Thank you, sir. Thank you for the opportunity.
My question is like, has this BSc and ICC syllabus changed and how that will, affect our top line of business, revenue-wise?
Revenue-wise, change in syllabus, that will, I think, help keep the market in the buoyant mode. Instead of increasing our top line, we can only make what we can make as per our capacity. But it will sustain the demand in the market. It will keep the pull in the market. It will keep up the prices also on the stable side. So to that extent, definitely it is going to affect the top line. Yeah.
Okay. And anything on the new education policy? So, how much we see this coming in?
Yeah, because as we explained earlier, also the printers who publish guides, help books, and all the supplementary material, so they have been for the last 2.5 or 3 years, they have been holding back their printing to the minimum level. So once NCERT or government does come out with their total curriculum as per the new schedule, so I think that work will start afresh. So that will add to the writing, printing, paper demand in the coming 1 or 2 years on the sustained level, at higher level. So that is what we are expecting. Yeah.
Okay, sir. Thank you, sir. That's yes.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. Next question is from the line of Gurvinder Juneja from Fortune Advisors. Please go ahead.
Yeah. Thank you for giving me the opportunity, sir. I have a question on the liability side of your balance sheet. When we analyze, we realize that a fair bit of your liabilities are due for payment in the next 1 year. So I wanted your guidance on how are you planning to repay or roll over that debt, and at what terms are you likely to get that fresh debt?
That is the part of the long-term loan which is payable due within a year. So that is due within a 1 year as per the schedule. So it's somewhere around 110 crores.
Right. So, sir, what I wanted to understand was, obviously you'll probably need to roll over some of these facilities because the free cash flow in the next 12 months is going to fall short of the repayment, which is okay. But just wanted to understand, what's your preparation and what kind of response the banks are willing to give you? What kind of lines are they willing to give you?
So yes, in the normal course, we are like as per our repayment schedule, 110 crores is almost due for repayment in the next year. But management is also planning to pay additional debt of maybe somewhere around 20 to 30 crores in the next financial year. So we will start repaying like 130, 40 crores in the next year. So that is our plan.
Whatever due is will be definitely paid, and we intend to pay even more than whatever is due. So that is the plan of the management. Yes. Maybe we'll pay some amount extra in this financial year also over whatever has been due in this financial year. Yes.
Got it, sir. Got it, sir. And sir, what's your total capex plan for the next 12 to 18 months? I mean, of course, you outlined the areas in which you will make the capex. But an amount, an estimated nearest, 25 crore estimate of your capex plans?
Yeah, I think with the soda recovery boiler and other small projects, it could be anywhere around 100 to 125 crore each year in the next 2 financial years. Yes.
All right, sir. All right, sir. Thank you very much. Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. Next question is from the line of Merit from TSG Capital. Please go ahead.
Hello, sir. Good afternoon. Congratulations on a wonderful set of numbers. I just wanted to ask, we put out an announcement in January saying we got an order worth 17,000 tons from, Maharashtra and other state boards, and it's going to contribute around 200 crores of revenue. So that comes up to around 115,000 rupees per ton. So, is that a sustainable, margin? What the kind of margin are we going to make on that? And is that a sustainable price that we could look at for the next 12 months maybe?
Yes, that value is inclusive of GST and delivered.
Okay.
Yeah. So the realization that we get is, again, as I explained, in the range of, which is higher than the market by 5 to 10% depending upon order to order. But because market was going up at the time of these tenders, so maybe you have noticed that in our first quarter, our margins were on the lower side because we were executing orders which we had taken on the lower rate. So once we are into government business, so maybe when other people are having low realization, we may be executing orders which we had at a very high price in the peak market, when people were enjoying peak rates. So that phenomena almost continues with Satia, as I have been telling you earlier. Even in Corona period, we were able to maintain our margins because of that only, and our numbers also. We made almost 110% plus capacity utilization even in COVID period. So the margins are likely to be maintained in the next 2 quarters because of these 2 big orders that we have got recently, and thereafter will be with the market. Yeah, as it happens with everybody, yes.
Right, sir. And just a follow-up. So this quarter's results, we put out, a huge jump in our results have come from the power generation, and there's a drop in the paper segment.
Yeah.
So, any clarification on that as to why that happened?
Actually, yeah, it was due to some transfer pricing advice from one of our advisors. So earlier we have been booking energy transfer to paper segment from power segment at a lower cost. So they advised us we need to book it at a higher price, looking to the enthalpy of the steam that we pass on to the paper segment. So that is why our sector profitability is on the higher side and paper segment is on the lower side. So we get benefit of 80 deduction in power segment. So ultimately overall figure means the same.
Right. And this we're going to continue to do this going forward?
Yeah, because they explained a very scientific basis. They gave a very scientific basis of steam enthalpy. How much energy is there in the steam once power is extracted from high pressure steam and low pressure steam is given to the paper or pulp sector. Yeah. We intend to continue that. Yeah.
Thank you. Thank you so much, sir, and have a good day.
Thank you.
Thank you. Next question is on the line of Bala Murali, individual investor. Please go ahead. Sir, sorry to interrupt you, but we are unable to hear you. May I request you to speak through the handset, please?
Yeah, my question is on the cutlery business.
Bala Murali, sorry to interrupt you. Your voice is not coming very clear. May I request you to speak through the handset?
Yeah, my question is on the cutlery business. So, how much is quantity from this CapEx we can expect, and what kind of revenue we can expect from the next year from this season?
Yeah, as we told, our total, we'll be having 6 new machines of 1 ton capacity per day, and 2 machines we have already with us with 2 ton capacity each. So total tonnage capacity is almost 10 ton per day. So if we have 70% utilization, if we are able to take from these machines as we find is the prevailing practice in the industry, so 7 ton per day. So we should be ending up at full capacity utilization, minimum 2,000 tons of cutlery in a year. So if the price is anywhere in the range of 200 rupee a kg to 250 rupee a kg, depending upon the item to item, so the top line for this segment should range between 40 to 50 crore. Yeah.
Yeah. Thank you. And one more thing, in Q4, how much we can expect from the paper segment, the production figures?
From the cutlery?
Almost 100% paper.
Uh,
Cutlery, not cutlery, paper segment.
From the paper, yeah. Paper, we should be doing almost 55,000 ton minimum.
Yeah. Okay. Thanks a lot.
Welcome.
Thank you. Next question is from the line of Hemant, individual investor. Please go ahead.
Sir, thank you for providing me the opportunity, and congratulations on a very good set of numbers. So basically, two questions from my side. First of all, we had earlier guided for 2,000 crores of revenue in FY23. So we have already done close to 1,360 crores. So are we on track to deliver 2,000 crores? If that is the case, I think Q4 numbers should be better than Q1, Q2, and Q3. This is my first question. The second question is, when do you expect the new education policy to kick in?
Yeah, as you rightly said, I think my estimate is definitely PM4 numbers will be on higher side, almost 10% more than the last quarter. So we should be crossing 500 crore easily if everything goes fine. So we may be anywhere near 2,000 crore. So maybe 1,900 crore if everything goes well. So that is a right observation as you made. And new education policy, because you know how does the government move. So once the curriculum and all those things are rolled out, so I think their true effect will come in the next season. Because for this season, for the next session that is going to happen in the next year, all the textbook boards, they have either already done their buying and printing is going on in full swing. So from next year onwards, that fact should come. Yes.
So one more thing is, given the kind of growth which the company has given, but actually the market cap is not reflecting the same. So what steps the management is taking to create more investor awareness sort of thing?
Yeah, the management has already given interim dividend of 20%, and let's see what's the final dividend. So number one is management is ready to share whatever fruits they have with the investors. So that should make the investors interested in the script, and the confidence with our consistent performance. So we have been going to the market time and again after every quarter and answering whatever queries to our best ability that we could answer and make our position very, very transparent. So I think it is up to the investors then to see and trust on the guideline, on the transparency that management has, and definitely people will come. Yeah.
Okay, sir. Thanks a lot.
Welcome.
Thank you. Next question is from the line of Govindlal Gilda, individual investor. Please go ahead.
Hello.
Hello. Yeah.
Good evening, sir. Thanks for giving the opportunity. So earlier you answered to the questions regarding paper outlook on that. Just one confusion. You told that recently pulp prices have corrected because of that paper prices have corrected, or there is some misunderstanding from my side?
Yeah. I said that international pulp prices, maybe softwood pulp, which was $10,070 almost 3 months back. It's now at $830. But definitely, since the delivery lead time in getting that product delivered is 2 to 3 months. So whatever we have booked 2 to 3 months back, so we get delivery after 2 to 2.5 months. Number one. And number two, that component of imported pulp in our final product is 5 to 10% only.
I know, sir, softwood pulp is used for packaging board, all that. It is minor percentages. My understanding is correct that you told recently prices have been corrected, or because of this, you are lagged with effect what you are getting raw material cheaper, going forward prices will correct. What you have told, I didn't understand. Just clarification.
No. International pulp prices, they reduced because of resolving of logistic issue, number one, mainly, and energy prices coming down internationally. As you know, gas prices, which in Europe were almost anywhere near 20 euro, they have come down to almost 3.5. And coal prices, they have also come down. So energy prices have come down, number one, and logistic issues have been resolved, number two. So these were two major reasons which were making the mobility of the pulp difficult, and prices were going up. So rest depends on the new capacities that come up internationally, as in hardwood case, where is the capacity, two capacities are coming for almost 4 million tons every year. So once they come, so hardwood, which was at 960 at peak, is now available at almost 760 or near about that range. So, and similarly, wheat straw prices, which had peaked at one time, even our National Economic Survey wrote one line in that survey, that fodder prices have become very, very high in India. So it went up to almost 10,000 rupee a ton. Now they have come down to almost 9,000 or 8,500 rupee. Almost 10% decrease is also there. So I think things are normalizing, and let's see what happens in the future.
So I understood, sir. This hardwood pulp prices have come down. Any your view, sir, going forward, little longer term, how the pulp prices you are seeing, they are already came down from 960 to 760, you told. So little longer term, what's your view on pulp prices, sir?
Actually, a lot depends on China. Like India, hard softwood is 830, China is 890, 900. Europe may be even still higher. So, but similarly, hardwood, international trade, this trend is likely to sustain for some time. That is for definite, for another 5 to 6 months. Yeah.
Also, so if in spite of this pulp prices coming down, your view is that paper prices will sustain at this level till June.
I said after June, even paper prices may correct.
So because of that, raw material prices quite going down, or generally after June, 2-3 months, off-season will be there? Generally
demand because demand is at the peak from January to June. So once the demand subsides, and then prices may correct to some extent. That's what I said.
So how much they can come down, sir, June to, let us say, 3-4 months because of off-season, when again the season starts November, they can go up again, sir?
Yeah, actually not more than 5-6%, because internationally today the price is anywhere around $1,100. So if import price we see, so even that comes anywhere near 86 to 88,000 rupee a ton only.
So you mean to tell right now Indian prices are at import parity?
Yes. Rather slightly on the higher side because of non-availability of imported paper, number one, and second because of the early lead time that we have in delivering the goods. Yeah.
So to sum up, what I understand and what you told, so instead of like the prices coming down, they have come down also, prices will hold till June, you are telling that, then because of off-season, 5-6%, they may come down.
Yeah.
Then again, but little longer term, if you take 1.5, 2 years view, what can they say, downsides are to paper prices, sir?
Yeah, 1 to 2 years, really, we cannot take chance now, as I said earlier, that new education policy, how does it unfold? How aggressive the government is in implementing the schedule that they have given to different boards, and so it depends on government effort. Yeah.
So net, even the prices come down little bit for 3-4 months. So this FY23, this year, what we are going to conclude, so 24 same performance we can repeat, I think, on EBITDA and
Yeah. Yes, because as I said earlier, the raw material prices have come down and are coming down. Chemical prices are coming down. So fuel prices, they have substantially come down. So the margins are likely to be maintained in the industry.
versus quarter 3, quarter 4, this current quarter,
Should be better.
starting of chemical and coal, all that, it will be some benefit will be there. No, that.
Yeah, there will be definitely some benefit, and quarter 4 numbers should be better than quarter 3.
Coal prices, how much they were average quarter 3, and sir, quarter 4, right now, how much they are?
No, actually, we are not buying any coal, but definitely they have come down substantially. I can't quote the exact number because there is a lot of variety in the coal segment looking to the calorific value of the product.
Great, sir. Thank you for all answering so patiently. Thank you very much.
Thank you.
All the best. All the best.
Thank you. Next question is from line of Utsavan, individual investor. Please go ahead.
Thank you, sir, for allowing me to ask the question. Congratulations on the great set of numbers, sir. So I'd like to ask, as the popularity is increasing, do we see the dividend percentage increasing over the time, over the next few quarters?
I think Rajatji being CFO, I didn't know. Sorry, you are asking for dividend?
Yeah. Do we see that increasing? Because we see that the net profit margin of the company is increasing, right? That has gone up from over the past 3 quarters. If that sustains, can we see that the percentage of dividend increasing down the line?
Yeah, definitely management is planning for the dividend policy. That will be definitely you will see the increasing trend. We have already announced 20% interim dividend, and we can plan any final dividend too. So you will see the increasing trend in the dividend.
Okay. And just wanted to get an update regarding the raw material prices like the wheat, straw, and that is being used as pulp for the paper, right? Are these coming down? So do we see the profitability increasing in the Q4 as well? Like the NPM margin going up?
Yeah, in Q4, definitely, as we explained earlier, the numbers should be better than this. And definitely, once the cost of raw material consumed, which used to be earlier in the range of 40 to 41% in agro industry, which has now gone up to 45, 46%, and in some cases like ours, where we are using waste paper and imported pulp also, to almost 48, 49%. So once we come to that level, we could expect higher EBITDA margin, definitely. Yes.
Okay. And what's the current wood producing capacity of the company?
It is almost 160 to 180 ton per day.
Like they just mentioned in previous con calls, like you're planning it to increase it to 300.
Yes.
Any update on that? By when can that be done?
Part will be started in the last quarter because we have 8 digesters where we make the wood pulp. So 2 or 3 digesters with the new technology that we have been telling earlier, which will be consuming low steam and giving higher pulp. So they'll start in March only, and next 6 they will start by the end of the first quarter of next financial year.
By March, by what capacity will reach from 160 to what capacity will be at?
So we'll be adding almost from present 160, we should be exceeding 200 ton per day.
By March, right?
Yeah, by the end of March.
And the balance 100 will be by when?
Rest will be by the end of the next quarter in the next financial year.
Any reason why this has been delayed? Because we were expecting this to be in this coming third quarter, right?
This is a project of its own kind which needs lot of instrumentation and reworking, lot of fabrication. This is a project of its own kind which is second in India, I think, if I am not wrong. The first was done by JK in Sirpur.
Yeah, like the second company Satia that is doing it.
The second company is Satia. So there's lot of work in that, lot of engineering involved, and since it has to be, it's not a new plant, so we have to run the existing facility also and do changes in the plant on running basis only.
Okay, so like by the
March, a lot of time. Yeah.
Okay, so by March we'll be getting up to 200. And all the trials will be done. And by Q1 will be approximately near 200, right?
Yeah.
Just one more thing, like when we reach at 300, right, for the pulsing capacity, keeping a normal scenario, right, what profitability do we see is bringing us up further?
Because profitability is linked to so many factors, but definitely the cost that we have been paying over and above the normal cost by using waste paper and imported wood pulp, so that will be corrected.
Like do we see 4-5% margins being added due to this from next year?
Minimum 3 to 4%, yeah, definitely.
Okay. And I hope there's no delay further, right? Because it's already 1 year that has been delayed, right?
We are trying to maintain quite strict schedule, but since we have to have 160, 180 ton pulp every day, so we cannot shut down the total facility and then do whatever work has to be done. So it has to move. Yeah, that is the main issue, yes.
Yeah, I understand that. That's why maybe one of the reasons that's getting delayed. That's one more thing, right? I see the profitability has gone up also. Do you see the debt being a little bit earlier so that get the interest cost down?
Pardon?
As the profitability has increased, right? We are getting much more better NP and all those things. So do you see that we can pay the debt much earlier? So that will help us bring down the interest cost down.
As I already said, even management is paying to intend to pay some debt. They intend to prepay even this during this financial year. So next year again we'll be paying more than what is due to the institution. Yes.
Like any range one idea how much additional will be paying this year?
Minimum 5 to 10% this year and maybe more next year.
5 to 10% of the additional that is required, right?
Yeah, at least 5 to 10% of the total debt payable. It is almost 100 crore plus in a year.
Okay. And how is the outlook for Q4 and Q1? That's the final question from my side.
Q4?
And how is the outlook looking at? Because you have orders for
I said earlier also it should be better than Q3. And since price realization is going to be on the higher side and production numbers, they are likely to slightly exceed or remain the same. So we should be even overtaking the top line for the that we achieved in the Q3 and should be doing more than 500 crore. So looks to be good to me. Yeah.
Sure.
Much better than Q3. Yes.
Sure. Thank you so much. Congratulations on the great set of numbers, sir.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Next question is from one of Manjal Shah from AMA Services. Please go ahead.
Sir, just two bookkeeping questions to Mr. Rachit. What would be the cost of funds, the cost of interest actually, so the interest rate for on the debt we have right now?
Yeah, as we are aware, repo rate is increasing like every month. So current cost is somewhere around 8 to 8.25%.
Okay. 8 to 8.25%. Okay.
Yes.
And the tax rate, basically what I am seeing that last year we had a tax rate of around 18%. So what would be the tax rate for the full year this year, full this year?
We are MAT paying company, so we are paying around 17% MAT. But yeah, effective tax is somewhere around 12-13% due to the higher 80IA. So we are like enjoying tax holiday, plus we have some agriculture tax-free income, some non-taxable REC income. So effectively, the tax rate is 12-13%.
Okay. So, is it expected to continue in the coming 2 years also?
Yeah. In fact, for next 5-7 years, it should remain the same.
Okay, next 5 years. Okay. Thank you for this. Thank you.
Thank you very much. And I'll hand the conference over to the management for closing comments.
Thank you, investors, for your interest in the company. We wish you all a very, very happy and prosperous new year. Thank you for your interest once again. Yeah. Bye.
Thank you very much. On behalf of Satia Industries Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.